Hey everybody, hey traders, Chris Pulver here. Just after 3:30 p.m. Friday the 23rd, we are wrapping up here for the week, which was quite the noisy week. A lot of drama coming out of the holidays with Martin Luther King Day. Markets closed on Monday. We had Donald Trump a little bit vocal this week, threatening to take over Greenland, and all of a sudden there was some escalation in geopolitics from the European Union to the U.S. That was all kind of simmered down as early as Wednesday because the market opened up with a nasty gap from Tuesday or over the weekend. We gapped lower on Tuesday, proceeded much lower. I think the markets had like a 2+% sell off, which would have taken us back to one of the worst sell-offs we saw since like October last year or November last year. Anyway, long story short is there was a Wednesday pivot, and all of a sudden things de-escalated. We're not back to all-time highs, so we're not back to 69.86 or near that 7,000 handle. So we want to keep a close eye on where things are going to go for next week. And we have a big stacked earnings event next week with some big market tech or market cap. We have, let's try to think, Microsoft and Meta, Tesla, Apple, all with earnings next week, along with some others. I'll show that in a little bit. And then we sprinkle in FOMC with Jerome Powell's press conference, one of his final couple of months here as Fed chair. That will be Wednesday at 2:30 or 2 p.m. Eastern time for the rate decision. It's expected to be a pause. And I believe, as far as I can see on the Fed probability, that the pause will continue into maybe March, with maybe the first rate cut, if we're going to see one, would be in April. So time will tell. But I do think that where we're sitting right now is some pretty solid indecision around that 69.10, 69.15 handle. We had a big gap lower, and that price was around 69.40. So that's one level the market obviously wanted to come back and maybe test. We have the recent all-time highs in that 7,000 handle, which if we have solid earnings and the Mag 7 especially just outperforms and beats expectations on the top and bottom side, maybe that's enough to drive the market back above 7,000 with some positive momentum. But if it's lackluster earnings and the market is fragile, I think we could have a quick fall to, I've said this on the rising wedge pattern, as low as like 6,600, 6,500. And hopefully not too much lower than that. That's a major support level that I'll show in the charts here in just a bit. So anyway, wanted to get into the earnings, wanted to get into FOMC, wanted to get into some option flows with my gamma levels. We'll talk about that for next week's expirations because Friday is the end of the month. So we have big earnings, FOMC, PPI, and option flows that we'll be watching for next week. So I really think that coming into this next week with earnings, what are some of the highlights? We have United Health Group on Tuesday, Boeing on Tuesday, UPS, General Motors. Wednesday, we have, let's see here, GE Vernova, AT&T, Corning, Starbucks, Progressive Insurance. I've got some exposure there. ADP for some home security. Microsoft, Meta, Tesla, three big companies there. Wednesday after close. I've got a news play on Microsoft for it's a butterfly spread to the upside and downside. One of them offers like an 8-to-1 reward to risk. One of them offers 10-to-1. I need to see if Microsoft can get back to like $490 to $500 or fall down to like $430 to $420. If it stays in the middle with a big nothing burger, then I'll take a small loss. But otherwise, if I get an exciting pop on like Wednesday, Thursday, Friday, then maybe have a nice fat profit on Microsoft. Meta, I'll take a look at that for one of my newsbreaker services, see if we can get some good trades on Meta and Tesla, see if the options look okay. Let's see here, IBM, Waste Management. Las Vegas Sands, that's always kind of a good economic indicator for tourism. So if people are still spending, the casinos are alive and well. LVS tends to be a pretty good indicator of the overall economy. Thursday, Microsoft, Caterpillar, which is a high flyer. I've got some trades in Caterpillar and John Deere this year. And then we have Apple. We don't have Amazon. Amazon pushed their earnings out to February. Altria, if you're in the defensive side, that's just a tobacco giant with a high dividend. But I have some exposure there. Trying to think what else. Blackstone has earnings on Thursday before the market. On Friday, SoFi, Amex, Verizon, Chevron, ExxonMobil, some of those energy plays. I do have some ratio spreads on Chevron. I didn't get into ExxonMobil. Actually, no, I'm sorry. I have ExxonMobil, not Chevron, as far as my ratio spreads. And I've got some XOP and some other trades with XLE with the overall energy sector. I took a trade today on Generac. Let me see what else I have here. We had a pretty profitable week in daily profit play. We didn't get filled on every day this week, but we had a nice little pinned winner yesterday for daily profit play. So overall, we had three nice wins on the week, including a profit trap, which is great. Engineered options looking strong for hopefully basically three trades winners and three trades that are doubling. Each one is set up to be 100% return on risk. What else? We had a winner in pinch point this week. Waterfall income running well with some good forgiveness. So I'm just talking through some of my services here. Newsbreakers active through next week with Microsoft. I have a trade on Netflix as well. Double up. I didn't take any double up trades this week. I didn't really see any convincing flows. I was kind of using my daily profit rate levels for defense to kind of do that. So I just didn't see any outlier levels that were really, really obvious for double ups. But I'll see what I can get for next week, especially with FOMC. We'll probably have a couple good alignments that'll stick out like a sore thumb. So we'll watch that. Pinch point, we got plenty of trades in and still running. We're going to ride those out to like March, April, May expirations. All we need is volatility. That's what the scanner's for. And so any upside or downside would give us a pretty good run there. We had a winner close out for our profit target at 50% this week. That was OKE. I'm trying to think what else. Let's get into some levels here. So this week, I mean, this is Tanuki trade. This is some gamma flows. Zero DT is pretty quiet right now. But if we get into Monday the 26th, it's a little sparse. I mean, we can see a pretty big level here at 69.25. We can see a level up towards the 7,000 handle again. That's a big run for a Monday. I don't think that's going to happen. I need trades on XSP, for example. Let me see if I have any XSP here. XSP going into Monday. If we stay above 686, then we should have a full winner for my engineered options for 100% trade. If we just hang out, right around this like 692.50 zone, have a bit of a stall day on Monday, that would be great for us. We can grab our winner there. There is a little bit of gamma level at 684, but I'd say the stickier part's going to be hopefully here with some positive gamma baked into Monday. Just have the market hang out at 692 and just kind of be indecisive coming into FOMC and earnings. Lots and lots of volatility, most likely expected Wednesday, Thursday, Friday. So if you're looking for some direction for the week, I would imagine that it's going to mostly come Wednesday after Fed, Wednesday with earnings, that's after market, and then Thursday, Friday, markets are kind of free to move how they want to move. So if you're looking at actual direction, I would think it's going to be after the close Wednesday or maybe some volatility during FOMC, but primarily Thursday, Friday to get us into the end of the month. If we go into the end of the month, here's the 30th expiration. So we have some gamma levels here. This is XSP. You can again see like the 695, which is equivalent to the SPX 6950. You can see the 700, which is equivalent to the SPX 7000. If I go back to SPX, these are again some pretty notable levels for Friday the 30th. A lot can change over the weekend when the futures market opens back up on Sunday night. We will see if these start to fill up at all. Maybe for the week, this starts to fill up with more like neutral to positive gamma. This is the stuff I watch every single day, by the way. So in my daily profit play service that I run every single morning, my daily profit plan room is free for everybody. My daily profit play is my zero DT service that I run with about 1,000 members. And we jump in and grind every single day if we can. And that's what I'm using, stuff like this for is, do we have some levels to trade off of? Do we have some baked in, resistance and support levels? Where do we have these big sticky levels for some directional trades? And then it's nice to go out a couple of days as well, going out to see what the week has given us, going out to maybe the big monthly expiration for February is going to be the 20th and 21st. But right now it's kind of setting up like it's pretty neutral right now. I think a lot of this stuff starts to get filled in through next week's trading. So let me take a look at this chart. This is what I think is one of my cleaner charts so far for the S&P. I'm using the SPX 500, which is this chart is basically running, 23, 24 hours a day through the week. And I think this is nice because it eliminates a lot of the noise from gaps open, gaps lower, gaps higher. And this is what the market's overall doing. So this kind of fills in a lot of those blanks and fills in the gaps. Structurally speaking, next week is potentially a make or break type week. And it's not a make or break. I don't want to be, I'm not exaggerating, but what I'm saying, as far as like market direction and overall flow, this is where we are at for the month of January. Okay. So right now, January is carving out just a tiny little gain. And I could see the market either staying green on the month and pushing maybe a little bit higher if we want to try to retest the highs, which are just shy of that 7,000 handle. Okay. But without getting a big conviction candle above 7,000, this might stall into February very quickly. So I'm a little skeptical of the market's ability to really break through 7,000. But if it does, I do think there's a momentum behind it, because I feel like people will be chasing with the reassurance like the market's up, we're at all-time highs, yay, hooray. And it's just money flows in and the markets chase this thing higher. And this is just another grind. And this is why I've said upside risk is a very real thing, and that could happen. The flip side of that is we have seen, as far as just a simple bar count and candle sequence, since the April low, take this as candle 1. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10 candles. Now, indecision in November, indecision in December. Could January be another month of a slim, tiny little gain? Maybe. Is January going to give some of it back? Maybe. But I think that's where February, March comes into play. If we have just this sliver of gains for January without a bunch of upside momentum, I could see February and March being, choppy, maybe having another long wick to the south, similar to what we had back here in April. The markets could be very noisy. I don't know if I said it in this video, but I've talked about it this week. I think that this year we might end up seeing some kind of backwards asymmetry, which usually when traders talk about asymmetry, they're talking about low risk to high reward. Unfortunately, I think that this year it might set up to be the opposite. I think the traders have to be prepared for a 10 to even 20% correction in order just to get a 5 to 10% upside move. Based on where we're priced for earnings, based on what we expect for our market valuations, this whole narrative of AI, just it's like everything has to be so good and so optimistic to keep this party going. I think it can. I really do. I'm still bullish on the market, but it would almost be easier to see a correction first, get it out of the way, get it out of the system, and that way we can focus on positioning for the remainder of the year. Political risk wise, I don't really want to be super bullish. Just complacently, is that a word? Complacently, or just assuming that the market's going to be bullish into the end of the year, because with the midterms for the U.S., there could be some massive political policy that would change going into the new year. It shouldn't change much because obviously November, December, it's not a new thing. But come January, there could be a swing from a Republican majority to maybe a swing to the left. I don't know. But as far as my trading positioning, if we have a pullback, I'd probably position reasonably well for some gains running into like August and September and even into October before the midterms. So that's kind of what I'm thinking at seasonality wise. And I'm going to play a lot of trades if I can. I did it this week. If we have any type of flare ups in volatility, like we saw here, the VIX went from, we had fresh lows in the VIX back in December. We hit the yearly lows late in the year. And you can see that we welcomed the new year with a nice little flare up in volatility coming up to about 21. And then 21 quickly turned back to 15.7. I could see this happening a lot in 2026. A little run up in volatility to 20 plus, a little retreat in vol suppression back to 15, 16. If we have these run ups in volatility, I will probably use that as an opportunity to sell a lot of options and some premium back down below this April level. And obviously, having more time in those trades, I can pull in a lot more premium. But even if it was going out, 3 months or 6 months, and trying to sell some out of the money options or sell some type of, I don't mind naked puts, depends on the asset. I don't mind ratio spreads, depends on the asset. But even for the index, if all we did in 2026 was grind such a slow grind higher, and we've got some volatility to the downside, but it still reflexively rallies. If we're slightly higher, just above that 7,000 handle, okay. But if we have some pullbacks to, 3-5%, we have pullbacks maybe to 10-15%, my focus is I'm going to try to buy those dips. But if I can sell premium back to April lows, I don't think this level is going to get touched at all this year. And I hope that it doesn't, obviously, if I'm positioned there. But if we just go sideways, volatility down, but go back up, if I can sell at those heights of volatility, I think that's a pretty nice way to generate some income without ever having any type of assignment risk. So that's a plan, at least. We'll talk about that more in my live sessions. It's probably one of my services called Project Options Edge that I would do some trades like that with. But based on the candle cycle and this kind of, 10 candles, maybe coming into some February, March indecision, this next week is going to be noisy. A lot of the volatility is going to be Wednesday, Thursday, Friday with the Fed and after, and we'll figure out where the chips fall. If there is the market's ability to carve out just little tiny gains on a weekly basis, little tiny gains on a monthly basis, that is all I need for some full 100% winners on one of my services called Engineered Options, where we do a lot of math in that course to figure out exactly where the trade is that it needs to be for like a break-even trade. And obviously with good alignments, we participate. And so I've kept it really simple. We have levels where it's like, okay, this is a participation trade. I think the market can go higher. This is a break-even trade. As long as the market is break-even or better, we can make profit there. And I also pack in a couple of defense trades in case the market does cooperate. And the goal is that regardless of what happens, it's kind of like an income grid or an income leveling strategy where I can try to make net profits even if the market isn't the most cooperative. But ultimately, it's like volatility doesn't matter. It finishes at break even or better. And that helps us get some nice wins. So, I'm trying to figure out a lot of ways where, my services are, as long as I can have high reward, low risk and win an adequate amount of my trades, or if I can have, decent, let's say I get 50% return on risk, but my win rate is 85%. Or in some of these cases, this is like I risk basically $400 to make $100, but I win 90%. I risk $400 to make $100. I make 94%. This trade is a little bit more creative where I can have some plan Bs and Cs to get myself out of trouble. We had 97+% of my trades were winners last year on Project Options Edge. So regardless of how we trade in 2026, my goal is that I want to have ways, whether I risk more to make less or I risk little to make more, all of these add up mathematically to be profitable. So if I have decent win rates, I can make money. If I have decent reward to risk, I make money. And so these are where my services are as far as me plotting these on a chart. So anyway, that's the stuff that I do on a regular basis for a lot of my followers and members. I also have some really good foundational education here. If anybody's looking for kind of a fast track or boot camp into options, this is one of the courses that I built called Practical Options. I built this for my nephews actually when they were teenagers. And I've also given this to clients of mine that are over 90 years old. And the goal is if you have zero knowledge on option trading, I would love to teach you in a very practical way, very applicable way, how to trade price, time, and volatility. And you just have a couple of core strategies that help you trade the market up, down, sideways with a calculated bet. That's all an option trade is. It's a calculated bet. It can be directional. It can be non-directional. And I love it. I love how you can trade options up, down, sideways. I think traders get in the habits early where if you just buy long calls and you get a couple of big pops, that feels great. But then you realize, oh my gosh, time is working against me. I can never carve out the winners that I want. Price is in my direction, but I still lost my trade. How is that possible? People run into a lot of pitfalls when they first start trading options. So I'd like to kind of, let's say we bypass that pitfall and we can actually learn how to trade with risk-defined trades, making calculated bets. And if you have a narrative, you have a trade idea, up, down, sideways, this is a nice way to do it. Okay, so long story short for next week, earnings, like I said, going into the meat of the week is going to be Tuesday, Wednesday, Thursday. Mag 7 a little bit on Wednesday, Thursday. Like I said, Amazon got pushed out, but we will have plenty of earnings. I'm sure there's hundreds of other companies that I'm not showing you here, but these are some of the big ones as far as market cap. FOMC is going to be Wednesday at 2 p.m. I'll be live for that session. I've got some earnings plays. Netflix is one for the end of the month. They already had earnings. They beat earnings, but the price gapped lower. I'll see if that comes back to like $87, $88. On Microsoft, I'm looking for that. It's two butterfly spreads. I'm looking to see if I get into my profit trap there. I will look at something on Meta and Tesla, and possibly Apple as well, and see if those line up for something decent. And I'll do my typical like newsbreakers type search, where I find the trades I like, I'll take them. But for the gamma levels next week, it's a little light right now, but as we come into option trading on Monday morning, let's see where things are at. Hopefully Monday is a quiet day. It'd be great, and this is what I typically expect for an FOMC week, is earnings is going to be mostly Wednesday afternoon, Thursday, Friday. And so Mondays and Tuesdays of an FOMC week are usually pretty quiet and pretty dull. And that's perfect because that's a good time for us to take advantage of daily profit play. That's a good time for us to get a nice full winner locked in for engineered options. And hopefully we have three winners that will be 100+% return on risk on each one of those. We just need prices to stay above that break-even point that I talked about. So typically never a dull moment in the markets. I'm just saying do a better job this year of ignoring the noise. I'm not a trader that trades to get all excited and amped up. I just trade to make money. So the plan is let's follow some good order flows. Let's follow some good liquidity. Let's be positioned with strategies and be agile and nimble to make sure that we can adjust as we need to. Risk management is the most important thing in 2026, in my opinion. We could have some really wild and crazy moves. We could have things happen out of nowhere. We could be looking at Truth Social comments that turn into I don't know. I don't want to say a black swan event in 2026 because too many people expect it anyway. But I don't think that 2026 is without risk. And the crazy part about 2026 is we could have just as much risk to the downside for this, fourth turning AI, too much money is being spent, the consumer's down, labor market's weak, struggling economy, blah, blah, blah. Or we could also have the upside risk, which is you have an accommodative Fed that's cutting rates with Powell and company that maybe are going to be less independent with Trump and the current government administration, with a thumb over the Fed. You'll have a president that will be as vocal as he needs to be anytime he wants to be. An administration that is really all in on growth. And I think with the fiscal dominance and the fiscal spending and a Fed that is now injecting some liquidity back in the markets, it's going to be hard to turn that into a bear market. So I just think knowing that, my bias is bullish. And I don't think we have massive, 20, 30% gains. That would be an incredible fourth year in a row. But I think it'd be pretty impressive if we carved out even, 10 to 15%. But we will see. If we blow the top off 7,000, I think we can make an aggressive run, possibly to 7,500, maybe 8,000 is in the cards for 2026. That would be pretty nuts right off the gate or right out of the gate. I would think we might be like limping in a little bit. So anyway, market's officially closed. I'll wrap up the session here, and everyone have a fantastic weekend. We'll come back and I'll see you all next week in my daily profit plan. We run this service every single Monday, Tuesday, Wednesday, Thursday, Friday. I started up live at 9 a.m. Eastern time. I'm also live in a Zoom session. If you're in my Telegram, you can join through that Zoom link. Also, if you are watching me on YouTube, I'm live, youtube.com/financial wars. And, I'm live for my videos like this and others on my channel, youtube.com/Chris Pulver, which right now it's also Chris Pulver or Trade to Be Profitable. So wrap it up there. Have a great Friday. Have a great weekend. And we'll talk soon.